What's up, traders and investors? Wes back again to try to get you to think differently about trading and investing. And what we're going to talk about today is being contrarian. Being contrarian is difficult by our nature. I believe that we as humans get comfort from being part of society. We take social cues, we look for validation, we unconsciously put ourselves in echo chambers. We subscribe to these narratives, which feel good and everyone agrees with us. That's what we really long for. But in investing, it's almost the opposite thing that we have to do if we want to seek that deep value, if we want to seek those outsized returns. We have to look where no one else is looking. We have to find value where everyone has written it off. And then we can get those kind of returns we all desire. If we want to go along with the herd, we invest in index ETFs, and then we get the same returns as everyone else because everyone's doing the same thing, investing in passive returns. But if we want to step outside that and find that alpha, we got to think differently. And we're going to look at an example over the last 2 years in the making in energy, oil, and the narrative surrounding it. This might be a little bit of a contentious issue, but I think it's a great teachable moment in what it means and how to be contrarian. So, first, let me share a quote with you all, which I originally attributed to one of my favorite investors, Peter Lynch, but apparently it came from Tim O'Reilly. Being early is indistinguishable from being wrong. And of course, in investing, that's very, very true. It also made its appearance by Bobby Axelrod on the show Billions, which is a great show, by the way, great drama about a hedge fund. You'll really appreciate that if you're a trader and investor. Check it out. I really agree with this statement because the narrative in the energy sector has been very clear. Oil, fossil fuels are going the way of the dinosaur, pun intended. I agree with this wholeheartedly. We have to move to electric vehicles. We have to move to renewable energy. But we weren't ready back in 2020. Now, the counter to this, to give one more quote, is T. Rowe Price. It is better to be early than too late in recognizing the passage of one era, the waning of old investment favorites, and the advent of a new era affording new opportunities for the investor. I agree with this. So you really have to balance that between accepting that the old normal is going away to look to the future, but also not getting caught up in the hype. I love Kathy Wood. I love Kathy Wood, but on July 15th, 2020, she tweeted, oil demand probably hit a secular peak last year and thanks to EVs is now in secular decline. Though ARK has no formal forecast, I believe that oil prices are on their way back to $12. Okay. Now, she wasn't right, at least not now. But the problem is for her investors and for her fund, it doesn't help for her to be early, unfortunately. Let me show you a quick clip, and then we're going to go back through what's happened in the last 2 years. So this is a video that I dug up from a think tank, Rethink X. It was published on November the 16th, 2020. Fair use. We're just going to use a quick clip and get the gist of it.
The disruption of energy is inevitable. What we need now is leadership. We need communities and policymakers and entrepreneurs and investors to understand the implications of this disruption so that we can act on this information by making the right choices today. That means no further investment in coal, gas, or conventional nuclear power, knowing that those assets will be stranded.
I don't think he's wrong, but he was wrong on November the 16th, 2020, to not be making investment in oil, gas, and assets. Let's take us back to November the 16th and let's talk about what was going on then. Let's put on our Wayback Machine hats and really think and put ourselves emotionally back in that place because we need to understand what was going on. Oil, if you recall, went below zero, the futures did. And that was the result of lower demand and a structural collapse of the futures market. Oil is not worth nothing. It was kind of obvious at the time. But the prevailing sentiment was, especially with the Democrats taking both the Senate, the House, and the presidency, that this was going to be the push to EV. That was the narrative in November of 2020. And so oil was at about $40 a barrel and showing no real signs of recovering from this low. That's a big, nasty down move right there. But really, it kind of topped out below 43, and that was it. And so there's a lot of thinking out there that this was going to be the top for oil forever in the 40s, and then it was going to decline from there. ExxonMobil, this was a stock that I looked at in January of 2021. And I actually published an idea about this. And I'm not just trying to toot my own horn here. I want to really read this to you to express how I felt about this investment at the time. I even made a very negative title to it, Close Your Eyes and Buy. The reason I said that was because at the start of the year, with EV on everyone's lips, I wanted to be contrarian. The sector that was most hated, I was looking for the most depressed sector to invest in 2021 because everything had gone up from 2020 except for dirty energy. At the very start of the year, ExxonMobil was trading below their book value. In other words, if you took all their assets, all their exploration hardware, all their trucks, all their buildings, everything that ExxonMobil owned as an asset, and you looked at it on their balance sheet, the stock price was trading below that. I think the book value was about 55, and the stock was trading at about 50. It's because of this narrative that dirty energy was over, not coming back, done, no money to be made in oil ever again. That was the prevailing narrative. And so no one was valuing oil or energy stocks. People have just accepted that the future is already here, and they bid up all through 2021 for the most part EV stocks. That's when a lot of these things IPO'd because the hype was so strong. It was uncomfortable for me to put on this trade, even though it was paying a 7% dividend yield at the time. I had all these things going for it. And now in hindsight, but at the moment, I was very uncomfortable putting this on because it was up 21% year to date. Ugh. Oh my goodness, that's so much. Well, ExxonMobil now, from that $50, is trading at 88. Not quite double, but add in those dividends, it's been a pretty good run. Do I think that we should buy ExxonMobil now? No, I actually don't. I actually maintain a thesis that oil, as the case may be, is probably going to hang around here, around 100, where a lot of the break-even prices for these producers are. A lot of supply is going to come to meet the demand, and as much as I really do feel that we need to move into a completely electric vehicle market, we're just not there yet. And a lot of the hype that was surrounding the EV boom, it just didn't play out. Let's go and look at some of the comments on this video. This is another thing very interesting. Brilliant. Great summary of a very complex topic. I'm amazed at how few people are interested in this information. Extremely valuable content. Awesome. Amazing. Amazing analysis. Great video. You see that echo chamber? You see that validation? I think a lot of people, when it came to energy, they were early and they missed out on this gain, or they jumped into EV far too early. Now, if you watch my last video that I did last week, go check it out. I think now is actually the time to start looking at EV stocks now that all that hype is over. But as a contrarian, what I think people need to do, what I try to do is look to see where all the validation is, where everyone's agreeing about one particular narrative. And then I actually try to stay away. I actually try to assume that everyone's wrong. And I'm not always right by any means at all. But this is an example of where even when it turned out to be a great investment in over the last 2 years, it was incredibly comfortable, even for me that tries to be a contrarian, to put this investment on because I was going against the prevailing wisdom of 2020. So that begs the question, what do we do now in April of 2022? Well, I think we just have to apply that same framework. We have to look, what are the current narratives? I know what the recent narratives, the short-term narratives have been. We used to care about COVID. We don't. We used to care about interest rates and inflation. Apparently, we don't. We used to think that World War III was going to happen. Now we don't. Now the talk on everyone's mind is recession, 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 even though I don't see any data to really support it. That's just a general fear, and the market is full of that from month to month. The financial media has to publish something. When I get these ideas, I'm going to share them in these videos. For sure, I promise you that. I'm going to try to always take the contrarian narrative because I think that's where the alpha lies. So right now, with the market and consolidation as it is, I am actually a little out of ideas, but they will come and they'll be counter obvious, to put it that way. Look where everyone is looking. Everyone is convinced that this is it. This is the next best thing since sliced bread, and be very skeptical of it. Don't necessarily go against it, but engage in very healthy skepticism because, again, we're human. We're emotional creatures. We go to extremes, and it's really seen in the price of assets, how our narratives play out. When everyone believes that something is worthless, the price reflects it. And if you can see the actual value, then you can buy it when no one else wants to. And then they are left trying to jump into it after everyone agrees that it's the truth. But then when the truth becomes consensus, that's actually the top. And around the circle goes for most investors. Think differently and invest wisely. We'll see you in the next video.